Well, as the price of gold continues to set record highs, we're starting to see some merger and acquisition activity in the sector. Toronto-based Allied Gold has signed a friendly deal to be acquired by Chinese miner Zijin Gold for $5.5 billion in cash. Let's get more from this from Peter Marrone, the chairman and CEO of the Allied Gold Corporation. Peter, thank you very much for joining us today.
Roger, I'm happy to be here. Thank you for inviting me.
Why sell now? Why not wait? I mean, gold looks like it is going to continue on its run. Would it not be worth waiting for you? See what other offers might come up?
As we said this morning in our announcement, this is part of a broader process. We looked at the landscape from the point of view of what assets are there to purchase that would be synergistic. What can we afford to pay given our balance sheet? What's in front of us in terms of the obligations vis-a-vis that balance sheet? Are there business combinations that we could pursue? In the end, we also looked at it from the point of view of if there's a buyer, who is a logical buyer or logical buyers, and what should they be paying? I don't believe that anyone would price something on the basis of the gold price today or on the basis of where the gold price should be expected to go. Normally, as you're aware of the market, people are pricing things based on some discount to gold price. So if I look at it from that point of view, with a discount to gold price that is above where gold price is in analyst models and in market more generally, we're getting very fair value for our shares. And adding to that is we're at an all-time high. We are at the high for the year in the last 12 months, and we're being paid a premium on top of that high, and a premium that is close to 30% to the 30-day volume-weighted average price of the stock. I think the shareholders should be comforted that they're getting a very fair deal. And one more thing that I think is important here, which is that we're in a business of creating options and optionality. So in that context, and risk mitigation is part of that. In that context, I don't know where gold price will go. I'd love to believe what you've mentioned, that gold price continues to go higher, but equally it could go lower. And if it goes lower, shareholders have the certainty that they've got an underpinning in our share price with a cash deal of $44 per share.
Now, we've heard from some shareholders that feel that this could have been done differently, maybe re-rate on its own, and they're not excited with this deal. Are any worries about the vote that's coming up?
Well, every shareholder that is invested in our stock bought shares at a price that is lower than this, and every deal that we've done is at a deep discount to where this price is at. If I looked at it from the perspective of most of our larger shareholders, and certainly the shareholders that participated in the preceding financings that gave our balance sheet the robustness to build out our growth and get that re-rating, they would be making a multiple of their investment, certainly a premium to their investment, if not a multiple. So from that point of view, I'm not concerned about the carry on that vote at all. I would say to those investors that are saying, well, a re-rate is coming, so why not wait? I would say to them, why didn't you invest earlier? Don't wait for the re-rate, and you would have made a bundle of money in the deal that we're proposing.
Has anybody from outside the company looked at the deal and reviewed it?
Yeah, so we had a financial advisor. We formed a special committee. That's very typical, but I think it's important for governance. And that special committee had its own advisor that provided a fairness opinion, as we disclosed this morning. And so there is a fairness opinion. And fundamentally, the value is there at this price. The company is fairly valued. Can we argue that there's a range? The answer is yes, but we're well within that range. And we also have to look at it from the point of view, as I said a few moments ago, Roger, of what's the gold price that you assume. And if we look at the analyst models, what's on in market, how people are investing in our stocks, they're not taking into account $5,000 gold. They're not taking into account $4,000 gold long term. It's closer to $3,000. And I would argue that in what we're being offered in cash, all cash, is well above what is in those models and the use of gold price.
Now, this comes just after, not long after the announcement of deals and potential deals between China and Canada, but also we're in the middle of the trade war with the U.S. Any worries about the optics of this and then the fact that another company is coming off the TSX?
Well, let me deal with the first point first. I don't know that we've got the competency to deal with the geopolitical aspects. This is a company that has acquired assets before. It's a company that has acquired Canadian assets. Gold, as much as I admire the metal, is not considered a strategic metal. So I'm not concerned on the geopolitics. And on the TSX side, In the same way as when we sold Yamana in 2023, we formed Allied and listed it on the Toronto Stock Exchange. I will express a wish, which is that let's work on completing this deal. But once this deal is completed, are there other deals that can be done with this fit-for-purpose management that has done it with Yamana, has done it with Allied Gold, and are there other opportunities?
What's next then? What can you allude to what you might be looking at next?
At this point, I'm focused on going to our shareholders, communicating the message about what this deal is about and why our board saw fit to accept this deal and getting the deal completed. Let's come back to this in a few months and see if there's something else.
Okay, and if the deal by chance doesn't go through, what would be Plan B for you?
We continue with that robust growth that we have, as you described. What was it compelling to the multiple parties that looked at us and this winning bid? What was compelling to this bidder and others is that we are a mid-tier company that's underpinned by 2 tier 1 assets. They're paying a robust price to get that, a fair price, however, to get that. So in that context, my view is that we continue with business as usual, and we looked at the other strategic opportunities to create value for shareholders that were always being contemplated and weighed one against the other by our board of directors.
Okay, we'll leave it there, Peter. Thank you very much for joining us.
Thank you for inviting me.
Peter Marrone is Chair and CEO of the Allied Gold Corporation.